In this video, we're going to look through total crypto market cap, Bitcoin and Ethereum, as well as Solana structural levels. I'll show you how to read between the charts. This is a very important skill to understand when it comes to trading and investing. Also, I want to show you something really cool, and that's at the end of the video. Let's run the numbers. Hi everyone, I'm Ken from the CTKS Method. My goal is to help you to become more of a financial and emotional blessing to yourself and those you love through trading and investing, so you can have a life of freedom, self-determination, happiness, and meaningful connection to others. Only around 1% of the population knows how to trade. Trading allows you to make money no matter what the financial conditions are. I want to help you to move into this top 1% where you can make money no matter what the financial conditions are. I also want to help you to invest more effectively by raising your ability to time the market. I'm here to help you gain the inside edge on financial markets by sharing my nearly 40 years of experience. Traders approach price action very differently to a lot of other people. They're always thinking in terms of the downward movement, the upward movement, and consolidation movements. They pay literally no attention to price, and all the attention is on structural levels. By thinking in terms of structure, you automatically know how the market is moving. When you have a lot of structural support levels beneath the current price, this is a really good thing because price can be rebounded upwards. If we find that we're failing to get across a particular resistance level, and a resistance level is just a structural level above the current price. Here we're looking at total crypto market cap. Before you just dive into the chart that you want to trade or invest in, you must look at total crypto market cap in the crypto market as well as Bitcoin. We're going to do those two things. And it's critical that you understand where the structural levels are. We can see that the entire crypto market has a structural resistance level at $2.472 trillion. It's been coming down for quite a while, but it's consolidated and gone flat inside this area. A bullish case requires a breakout from this 2.472, a reconfirmation of the trend and a move up to the 2.54. If we start to break underneath, we would expect an underside retest and a movement down towards the 2.388 level. One very important trading mindset: there is no right or wrong answer, it's all probabilities, and you can see the price is really chaotic. It goes up and down all the time. You have to get used to this. In fact, you need to profit by it. Mastery of your emotional state is really important. When you get down waves, these down waves call all the shorts into the market. When you get an accumulation of shorts, they're placing their stops above specific levels, and they're moving to break even as soon as they can. This means if their stops move inside the market and the price reverses on them, they can get a cascading liquidation of shorts, which forces the price up. When there are too many longs inside the market, you get action just like this. The shorts come down and liquidate the longs, but the longs also liquidate the shorts. It's a constant dance between liquidations of shorts and longs. When you first begin trading and investing, it's very important that you look at your structural levels. Disregard price. Price is just a con. What you need to understand is the structure of the chart that you're looking at. Popping on the structural levels, we can see that there's a structural resistance just a little bit above that 70,000. What you will see is that when price comes up to a structural level, if it can't confirm it and resume upwards, it's going down to the structural levels below. This is why it's vitally important to know where the structure is. If you don't know where the structure is, you find yourself guessing. A lot of people don't mark up CTKS structure. They don't mark up all of price history with the most advanced statistically significant methodology in existence. Instead, they rely on recent indicative price. Recent indicative price is just like looking through your car back window to drive. Forwards, not backwards, that is. You just don't get the picture. we can see that the structural support levels playing in around that $67,000 mark are very important. They've been obeyed. There's a lot of buyers defending these levels at the current time. The best traders and investors understand how to read structural support and structural resistance. If it comes up to a thick level of structural resistance but can't confirm a move above it, that's called a failure, and a failure always results in price coming down to the next structural support or making its way down over time. You can see here there was a failure to reconfirm. These failures put negative price momentum, and if it fails a couple of times, that opens up these lower structural support levels. When you look at structure, you're actually looking at the truth of the chart. The truth of the chart is really important, and a lot of people think there's only one structural resistance level or one structural support level that matters. This is absolutely false. There are numerous both resistance levels and support levels. And here we're looking at Ethereum. These support and resistance levels are structural, which means they're statistically significant. Levels drawn from recent indicative price are not statistically significant. Now, why does this matter? Because if a level is not statistically significant, it doesn't matter. The smart money will just ignore it. We've looked at the three most important cryptos in the crypto universe. Now, what are we seeing if we were trading Solana? And Solana's been trading for more than 1,235 days. When we look at this price action, we know it's structurally bound. Structure means everything to a specific chart, and all charts have their own unique structure. So let's pop the structure on. We can see that Solana didn't make it above this 187 structural resistance level, so it came down to the 178 level. It couldn't hold that, so it came down to a very strong structural level at 170. And these structural levels are gravitational, especially when they're strong. And we can see that there's a bit of weakness creeping into Solana's chart. This makes it probabilistic that it will come down to 157.10. Unless, of course, Bitcoin picks up. If Bitcoin and total crypto market cap pick up, we would expect a challenging of this 170 level and a potential movement to the 178, even 187 mark. When the markets get volatile, you must know where the structural support and structural resistance levels are. If they don't confirm as actual support or resistance, they're coming down or going up, depending on what's actually occurring. At least you know where they are. What we're taught inside the school system is there's one right answer and one wrong answer. The truth is, that's not how financial markets work. Hence, the schooling system teaches nothing at all to us about money, nothing at all how to become financially independent. Those are skills that we need to learn ourselves. Therefore, if you're trading and investing in Solana, you need to keep your eye on this $2.472 trillion mark in total crypto market cap. Now, if you're an investor, you want the price of Solana to come down because you want to stack. Notice how I am just thinking about Solana's price chart while looking at total crypto market cap. This is how you want to do things. The fact that Bitcoin is above this $67,000 mark is very effective for us. If Solana keeps on coming up, it's because Bitcoin is coming up as well. This is a key thing to understand. You must be able to read between the charts. The greatest thing that you'll ever learn, don't be afraid of negative price action. If you are a true investor, you want negative price action because you don't want to pay top dollar. You want to pay less than that. But don't concern yourself at all about buying at the bottom. Just participate in price where you feel comfortable. The thing to understand, there are a lot of rules inside every single market. As Bitcoin comes down, it places negative price momentum inside the crypto market. You can see this playing out across all the major alts. Now, one thing that you notice is Ethereum is a little bit different. It's very strong at the current time. This is because the ETH ETF has been approved. This means institutional adoption and just public mass adoption as well. Because we've got a spot Bitcoin ETF in play and the Ethereum ETF has been approved. It just takes a couple of weeks to get the wheels grinding away. But we do expect the crypto market to do very well in upcoming months. As a trader or an investor, you want to look at negative price action as an opportunity to get into the projects that were far too expensive before. Don't see it as a reason to get out of the market. If you see negative price action and you just run panicking from the market, your position sizes are too large. Also, there's a good probability that you don't know where the structural levels are. If you don't know where structural levels are, you're in a lot of trouble. Also, no chart walks alone. This blue line is Bitcoin's price, and you know how Bitcoin is playing in through the entire crypto market. What's caused Bitcoin's price to come down recently is a weakness inside the major market indices. This weakness always translates through to weakness in the crypto market. Crypto is really tiny. As I was explaining in last week's videos, the Dow Jones had a tremendous amount of structural support when it was coming down like a knife through butter. I said, just be aware that there's tremendous structural support here. We expect it to bounce up, and that is exactly what it did. Do not be concerned at all about sell-offs in the market. You want sell-offs in the market. The top 1% thinks this way, and I want you to think this way as well. Don't run away, run into the market, but do so with knowledge. One way to start accumulating knowledge is to pick up the free cheat sheet on ctksmethod.org. This free cheat sheet is all about timing. It will help you to understand how to read the market more effectively. And the structural levels on Bitcoin, total crypto market cap, Ethereum, and Solana have been released. Now, I want to show you some really cool technology. In news today, the Spacetop G1 using augmented reality glasses as its screen has been released, and it costs around $1,900. Glasses create a 100-inch virtual workspace. This computer looks like half a laptop, and the pair of glasses is hardwired to the unit. If you want to race out and buy it, it's called the Spacetop G1. If you go across to Siteful.com, you'll see the Spacetop G1 there. You can see that you can reserve it here. Here are some specifications. Here is the chip and the memory and storage. In terms of battery and charging, up to 8 hours of battery life. The glasses are augmented reality, so that means you can see the computer screen and what's going on behind it. You also have speakers in the glasses. And of course, Wi-Fi connectivity as well as 5G. And also a webcam. The keyboard is 79 keys with a full-size US keyboard. It also has a trackpad. The operating system is SpaceOS, which is optimized for spatial computing. Let's have a look at the SpaceOS operating system. Basically, anything that you can do on the web, you can do through SpaceOS. It's all browser-based, and it looks pretty neat, but it could be a bit of time and just a little bit of effort to get used to it. Your screen will move as your face does. The key is, if you can do it in a browser, you can do it in SpaceOS. One of the really interesting things about this is it's highly secure. You can see from this that the person can see the screens in front of them, but nobody else can. From a security aspect, this is outrageously good. And you can also see that those glasses are hardwired to the PC. It's pretty cool. I want one. But there is unfortunately a bit of a drawback. If you want to reserve it right now, it's only available in the US. And it starts shipping in October 2024. Wow, a gadget, a must-have gadget.